Okay, hello everyone. Welcome to this weekly trading roadmap with myself, Miltos, where I will be going through, just like every other week, the event-driven risks, and then going through a risk and money management plan that I put together myself. Obviously, that will depend on your trading strategy, whether you use something similar. So, we start off by going through what events we have for the week, and as today is Monday, we'll cover Monday first. Basically, it's a very, very quiet day today. It is WIT Monday. It's a public holiday in a lot of European countries. We've got the DAX is closed today. A lot of cash markets are closed. So very, very little going on today if you're trading the European session. So I'd stay very attentive to that. Maybe that might follow through into the US session. But in any case, in terms of data, we don't really have that much anyway. We've got the US Empire Manufacturing. So overall, I've given a very, very low relevance for today. And honestly speaking, about a 5% risk allocation for this day in the week. So very, very little risk I'm allocating for today just because it is very, very quiet and should be quiet for the rest of the day. Moving on to Tuesday, we've got the UK CPIs, PPIs, RPIs. We also have the US CPI, these are obviously very, very big figures. I'd probably say US CPI probably a bigger figure, and the UK CPI might get a little bit of the back burner just in terms of because the Bank of England have said that most of the focus right now is on Brexit, so they won't actually be looking as much at these figures. So just bear that in mind. We also have the housing starts, building permits from the US. In terms of central bank monetary policy, we've got the Fed's Kashkari, Williams, and Kaplan speaking on Tuesday, and then the ECB's Prate, Noy, and Costa all speaking on Tuesday as well. So overall, I've given myself a medium relevance for that day, a slightly bigger risk allocation. Well, relative to Monday, a lot bigger, but just a little bit bigger than normal. Moving on to Wednesday, we've got the UK ILO unemployment rate with the average hourly earnings. We also have the European CPI, which is quite important. The ECB's Villeroy speaking, and then later on in the day, we have the Fed's minutes. So I've given myself, out of all the days, it's probably the highest relevance day, 30% risk allocation for that day. Moving over to Thursday, we've got the UK retail sales, European construction output, the Philly Fed leading index, and Fed's Dudley. Really, the UK retail sales is the biggest figure on that day, but still pretty low relevance overall. So I've given myself 20% risk. And then moving on to Friday, we've got the German PPIs, US existing home sales, and then we have a few rating reviews for France, Slovenia, Netherlands, and Estonia. Again, low relevance, giving myself a 20% risk allocation for that day. So in terms of risk events, we've got a few risk events that can kind of trigger some moves. If we're going to now turn to our kind of technical backdrop and what we're looking at in terms of the market structure for the week, I would say we probably have some really, really good structure this week. Last week we saw a lot of the things that we spoke about in the beginning of the week panned out the way we were expecting, which is a good thing, but not necessarily a great thing if you're not actually trading them as per plan. So that's something that I'm going to try and work on this week. If we take a look at the Bund and the weekly structure in the Bund and what that looks like at the minute, you guys can tell we've had a very consolidative profile, but we have seeked value higher. So in terms of where we're sitting, we're sitting above last week's value. So last week's value below here, we've got that's 2 weeks ago's value in here. Then we've got last week's value in here. The value area high at 163.89. This is the value area low. Sorry about that, guys. Value area high is at 164.30. So this is our value area in here. Currently sitting at the higher end of that value area. We've got a VPOC. Let me just bring that up for you guys. Coming in at 164.11, which we're currently just trading a dab below that. But 164.11 is our VPOC of last week. We're sitting in the higher end of that. Very, very balanced profile. You could see we've got the buying and the selling tails. But like we said, we did seek higher value. So just bear that in mind, the fact that we've actually seeked higher value. We had an open at the low and a close relatively closer to the high. So in terms of structure, the market does feel as if anywhere, I would be leaning towards a move to the upside, unless we can breach this value area low to the downside and hold below that. So in terms of scenarios, let me just clean this up for you guys a bit. In terms of scenarios, really, if we can hold above this value area low here, so if we can hold above there, I think we're still probably better skewed to a move to the upside. If we can breach below that, so if we don't have this scenario and we get below those 89s, hold that area and try to seek value lower, particularly if we start filling in this buying tail in here and start moving back into this sort of cave area to the downside. In that case scenario, I'd be more looking for, like I just said, a move back into this cave and for possibly a filling in of this area. I would also note, obviously, the fact that we've come up here for basically the second or third time now could be quite indicative that we're trying to top out here. So maybe the moves down into these areas might actually be a little bit more aggressive than normal. So even though I'm expecting this to kind of trade out and potentially move down to this VPOC at 162.95s, it could do so quite aggressively. But I think even a move to the upside could be quite interesting because last week we had a pretty decent structural move where the market tried to breach these 164.35s in here. We had this bit of a ledge in here at 35s. The market shot up to the upside and then false broke, came back inside and closed quite bearishly. Now, for anyone that's still bearish this market, they're going to have their stops, I would say, definitely above this high, which, let me just point out, I think comes in at around 49s. Yes, there we go. So it comes in at 49s. Above that, above those 49s, I'd be really wary, guys, because, in this area is likely to be short stops. So we're going to have some stops for the short sellers. They're probably anyone that's gotten short along this way down, put their stop above there. That could be a decent area for those sellers to start stopping out, and particularly because effectively those people that are short are expecting, we've seen a bit of a double top. We've come up to this area again, we've failed. If their stops are above there, it could get quite aggressive to the upside. And in terms of what it looks like, let me see if I can get it. We don't usually bring up 60-minute charts, but give me a second. Let me just see if I can pull up a 60-minute chart for you guys so I can show you what we're looking like. Let's just give it a second to download. Taking a little bit longer than expected. Sorry guys, just give me a second. Trying to get a good chart for you guys on the 60-minute. Okay, I think I've got one here. Right, so if we take a look at this structure here, guys, it is a structure that I do like, and I've for those of you that do know the way I trade and what kind of structures I look out for, I do particularly like a cup and handle. Now, the structure that we currently have right now looks very, very similar to a cup and handle. It's not as rounded, but it's got that sort of formation right now. Now, it seems like every time I talk about one of these structures on one of these streams, they never end up working. So that could be a bad omen. And when I don't talk about them, they seem to work perfectly. But I want to point it out to you guys anyway. We do have, obviously, these 164.60s here, and then the 164.49s, which technically could be seen as your kind of double top right here. So you have a double top. You have this sort of cup-shaped formation that comes up into this area in here. And this, what we formed last week, could be seen somewhat as your handle. Now, categorically, below these lows in here, so whatever that is, 163.62s, below these lows in here, that handle is now null and void. So you're no longer looking at this pattern as a cup and handle. You have to be very strict with this kind of pattern because it's very, very specific in its structure. So you want that handle to kind of form at that lip area, just under the lip of the cup. And the fact, if it gets below this low and starts breaching below that area, that's out of the way, and you're looking more at a double top, in which case you could get very aggressive moves like we talked about earlier. But if we can hold, and we hold this kind of cup formation, once we start taking out these highs at 49s, like I said before, we might have stops above there. A break above this area, I would be expecting a very, very aggressive shoot to the upside. Now, when they work, you have to pay attention to everything, put everything together. When these formations do work and we get the break of these double tops of the cup and handle, the break is usually super aggressive. So we're talking, 10, 15, 20, 30 ticks moves very, very quickly and with lots of volume, big bursts of volume. You see 1,000 lots coming to market, clipping highs. It's price action that you don't normally see. The reason why I like this formation is because you get that sort of really aggressive price action, and you can be aggressive and have a very tight stop in doing so. Now, when these formations aren't so good and they don't work so good, is when you get, let's say, maybe a 5-10 tick break of these highs, and then there's not really much volume in it. The volume's not actually increasing, and as we're taking out highs, we're actually decreasing in volume. If you start seeing a volume divergence, that's when you start asking questions saying this is not really the way a cup and handle should be working. And in fact, if we start breaching back below those highs in here that we just mentioned, you could see again another very aggressive unwind. So all in all, the structure as it stands for me, either side, we break to the upside or to the downside, there's going to be some good flow. So I think it's one to pay attention to. Whether you're bullish or bearish doesn't matter. I'm not necessarily bullish or bearish. I might have a slight bullish bias because of where we're trading, obviously at all-time highs and all-time lows in yields. But the structure is commanding your attention right now if you're trading the bunds. You need to be able to shift into those gears if we break some of these levels. So just do bear that in mind into this week. I don't usually pull up in my weekly structures a candlestick chart, but I thought it would be fruitful to go through one today. Now, in terms of, so we've gone through the bund, let's move over to the stocks, which I think the stocks actually has even better structure. So for those of you that do trade equities, probably listen in a little bit more now. Now, we left last week, and we talked about this on our weekly market wrap. If we closed the way we were, if we were closing the way we were right now without breaking the highs or lows, we would have an inside week. So point number one is that we have an inside week. So above and beyond, we should be paying attention to this. 29.72s is our inside week high. Our 28.73s is our inside week low. Now, what did we speak about? For those of you that were listening into the weekly market wrap that I did on Friday, you would have remembered that I said categorically that this structure is looking very bearish. I don't usually kind of call something out, but it just feels to me the price action, the longer term price action. I'm not talking about that intraday short term scalping price action between 2 or 3 ticks. I'm talking when we get a move to the upside, it can't sustain it, and we're starting to get these kind of, pullbacks, but the pullbacks is kind of the market's falling under its own weight. It can't sustain a bid to the upside. Notice, guys, we had this sustained move to the downside, left a bit of a tail here. We rallied, and then as we're rallying, we're just falling back, and then we rally, and then we just fall back. And it's doing it in this sort of fashion where when it rallies, it just like rallies really, really aggressively, and then it just stalls, and then falls back. It's kind of like when you're going up a roller coaster and you get to the top, and it kind of stalls for a bit, accumulates, and then it just falls really, really quickly. And we've been getting this time and time again every single day. We had this move back down, we accumulated a little bit, false broke down, rallied super aggressively into here, accumulated up here, and then again into the US session, we just whoop, back down again. Same thing in here. We had a move up, and we said this in the wrap up. We said if the market closes below this area here, especially if we close kind of below that weekly VPOC region, that was going to be one of the bearish signals for me. Now, notice what we've done this week so far. And I said, we could potentially be quite bearish this week aggressively if we start, especially if we get that signal and then we get the inside week break to the downside. Now, I'm not saying just be bearish this week, but just hear me out. We had that close to the downside. We opened up back into value this week. You can see that open in value. We tried to make a move back up to the upside above this weekly VPOC, which let me just draw in for you guys. So just wait a second. So that came in at 29.18. So we had our weekly VPOC at 29.18. We tried to make a move past it. We tried to cut through it and hold above, but you could see that actually acted as resistance. Now we've left a selling tail where we had a VPOC last week. So the market's now come into the highest traded volume price of last week and rejected it, said we don't want to do volume there. We don't want to trade there, do business there. And we've actually showed initiative to the sell side, and we're now trading and finding value below 29.08, which is our value area low of last week. That already now is giving me an indication that the market potentially wants to start finding value lower. Now, that can change. We can, just because it's a bank holiday today, we might just hold below here, come in tomorrow, hold this level, get back inside the value area, and then sweep right back up to the value area highs that we have at 29.47. But in the case scenario where we hold below these 29.08s and we use this area as resistance, then I think we're more likely to test these 28.73s, if anything. And if we test these 28.73s, which is our inside week low, I think below there we might start seeing some pretty hectic moves. So just watch out. This structure is looking kind of prime for a move to the downside and possibly even a big move to the downside. Now, it's also OPEX this week. Traditionally, we get a rally up into OPEX, so you never know. That could still hold. But if we're not seeing that rally up into OPEX and actually we're holding an offer, that could also be a tell. Maybe the market's weaker than expected. Now, that is a downside scenario. If we get that, we'll play that accordingly. If we don't get that, and like we said, we move back up and hold above these. So if we breach, let me just clear this up a bit. It's a bit messy. If we breach back above into the value area here, hold and test this value area high. If we breach that and hold, then we're looking at a move to 29.72, which is our inside week high. If we break that inside week high, obviously, we're looking at our previous levels to the upside and potentially a rotation back into this weekly profile, the weekly VPOC of that profile being at 30.50s. So, potentially we might also need to do a bit of work around here. Just notice we've got very, very lightly traded areas around the 3,000 area. With 3,006, there's 30.06 area, very low volume traded overall. It could be an area that needs a bit of repairing, could be an area that needs potentially some auctioning. So if we get back, so we get above here, break this area, we might test this area and kind of range, fill that out before potentially moving back to the upside and testing that VPOC as we just mentioned at 30.50. So that is an upside scenario. You have to give the upside and the downside scenarios. Even though I feel as if the market's giving me signs that it wants to move lower, doesn't necessarily mean it's going to take place. One market participant, one hedge fund could just step in and just change everything. That's why sometimes, the structure of the market's important to understand what it's saying, but sometimes one hedge fund could come in a short-term time frame. In a longer-term time frame, it changes, but in a very short-term time frame, over days, weeks, maybe even a month, Brevin Howard might come in and say, okay, we want to buy another 20% basket in European equities, and that could drive the market another 5-10% higher. So that could change just with one guy or one portfolio manager. But the way we're seeing it right now, the way I'm seeing it at least right now, feels as if that the market's potentially trying to find value lower. And if we take a look at the structure in the cash sessions, you'll see what that actually looks like. So notice here what we're looking at in the cash session. We've been talking about this sort of larger time frame head and shoulders pattern, which we've broken. We had that neckline, as you can see in here. The market, ever since we broke that out, we haven't actually been able to hold above that neckline. Like, we've tested it a couple of times in here on the week. This is a weekly chart, guys. We got back up to this area, couldn't close above it, moved back down, then we moved back up, closed above it briefly, and then right back below it again. Notice this pivot area here, around 31, 37. We've been talking about this every single week. We haven't been able to close yet above there. Now, given that structure, we said we have posted, obviously, higher highs and higher lows. In technical analysis 101, as soon as we take out this low here at 28.60 in the cash, that's when you start seeing the short-term bear trend come back into play, because now we've posted a lower low. Now, given the structure that we have right now with this inside week right here, this is setting up for me potentially for some decent downside moves if we break this level. So if we break this inside week to the downside, test these 28.60s and break, I feel as if we might be seeing these 26.72s in the cash fairly quickly. And if we bring this up, and if we start scrunching this up a little bit, and you just pay attention to the context of where we are right now in the bigger scheme of things, just bear in mind, guys, let me just put in some horizontal levels here so you can notice what we're doing. In terms of context, between 2009 and 2011, this whole area in here, you could see the highs. We're still, every time we got back up to these areas, we're seemingly holding an offer. And now we're holding below. We're in this range now. We're in this range. We can't hold above these areas. If this breaks to the downside, for me, I feel as if this market could see a rotation lower. And really, if we start breaking below this level, that's going to open up some very dangerous moves for long-term investors, that are really invested in the European equity markets. That could really be a situation where that causes some, spikes in volatility. I know the market's kind of closed in lately, but don't get complacent. The market could open up out of the blue. In the flip of a dime. You've got to be ready for this, guys. That's why I'm pointing out these structures for you guys, just in case they do take place. You've got to be ready. If it does happen, we've got to be ready to capitalize and trade them accordingly. Now, moving over to some of the FX markets, let me just show you guys a few things that I'm looking at. Obviously, we've been talking about the dollar. The dollar's had that false break. The dollar's had that really big false break to the downside. We said if we could, this is our double top, if we could hold below these 92.62s, that would be a confirmation of that. We broke it, immediately came back into the range. That is showing me signs that the dollar is still relatively strong in a medium-term basis. As soon as we take out these highs in here, at just above, let me just get that level in for you guys. It's just above, it's around 95.19s or 95.20s. As soon as we break that high, we've just confirmed a higher high, in which case we might be seeing a pretty strong reversal. We've been seeing this sort of falling wedge pattern. We've been talking about this falling wedge pattern. Usually what you get with these falling wedges, we always go through them the same way. We get that false break to the downside, quick move back inside, and when we break the other side, we should see some reversal price action. So just stay wary of it. Doesn't necessarily mean it's going to happen, but if we get above this key pivot, you can see it's also low and a high in here. If we get back above there, we might start seeing some dollar shorts having to stop out. And that's going to have its repercussions across the majors. We take a look at the euro, for example. Similar structure, obviously a bit of a transposition of that chart we just took a look at. You can see that very big reversal candle in there. We took out that weekly low last week. We posted another weekly candle that's quite weak. Once we take out this low here at 112.13s, that's where we're potentially coming back inside this sort of trend line, which we've been holding. You can see we've held it in here and then rallied. Once we break through there and we break through that trend line in there, that opens up some moves back down quite aggressively. So again, that could have its implications. It doesn't mean it's necessarily going to happen. We could hold here and then rally, but if we do, we have to be prepared for that if. Looking over at the cable. The cable's kind of acted. Last week we spoke about how it played out the way we were looking for it to play out. We said we had that false break, so we took out the inside month. This was an inside month high at 145.14s. We took out that inside month high, as you can see in here. We failed to hold higher prices. We came back inside, closed back inside, and we said last week in the roadmap, if we test these 145.14s, which we did right there, that would be a decent risk-reward trade. And we tested it, we held, we sold back down. Now, in terms of how this could pan out, well, technically speaking, when you get a false break of an inside month, week, day, whatever it may be, it usually should test the other side of that inside pattern. So that inside month low comes in at 139.02. So we are primed potentially for a move all the way back down into this level, which obviously we still have the Brexit fears playing out. If that starts heating up a little bit more and coming to a head, it might add extra impetus, because the more there's a risk of a Brexit, there's more risk of the BOE cutting rates. The more there is, the obvious prospect of the cable actually depreciating. So just keep an eye out of these structures, because it could get relatively interesting. Moving over just to a few of the commodities, just want to mention gold and oil, really. Gold, as we said in the wrap up last week, we were speaking about the fact that we had a bit of a pivot, move off of these 1303s, which we held, as you can see, 2 weeks ago. We had a bit of a move to the downside, but we haven't really breached that sort of key level we spoke about, these 1260s spot 8. You can see just in there, we've been holding this pivot point along this area. In the short term, for me, I feel as if that's like the key area the bulls want to hold. If we can hold this area, there's no reason why we can't test back up into these 1303s. Once we take out these 1303s, watch out. We might see some decent little stops in here, because we've had this sort of medium-term bear trend, and every time we take out a swing high, we're going to get those kind of medium to longer-term shorts stopping out or having to stop out. So just bear that in mind. This is all playing in within that, again, just as we've been going through since the beginning of the year, that sort of falling wedge pattern which we spoke about literally since the beginning of the year. When we did our first yearly technical roadmap, we were trading somewhere in here. We said this falling wedge pattern, if we could break it here, which we did, this could mean a change or reversal in trend. So that's going to play in with that hypothesis. If we cannot hold above that price, like we said, I think we're still relatively in bull mode up until we start taking these swing lows out. We still have a bit of a trend channel that I've put in just last week. It could just be sort of playing this sort of game. If that plays out that way, just bear that in mind. Until we start taking some of these swing lows out, you've got to sort of play it with the trend. This is one of the best performing assets of the year. You don't really want to fight the trend. Now, in terms of oil, as we've been talking about, again, sort of since the beginning of the year, was that falling wedge. I mean, it's kind of played out in a few of these commodity markets. You can see that falling wedge, which we took out in here. We started seeing some moves to the upside and some stopping out of those short positions. Now we've come back into this sort of structural area, which we said once we came back inside it and held back inside it, which we've done. We've come inside it, we've held it. Now we're rotating to the other side of it, and the other side of it for me comes in not at these highs in here, but more at these 47.71s, which we're only really about 40 ticks away, 41 ticks away from where we're trading right now. We had that false break last week. We spoke about this. Again, this is one of the setups that we were talking about, potential for a false break. We did get that small false break of about 20 ticks in the oil, came right back inside, and then we just completely ramped back to the other side of the inside week high. And now we're potentially testing that area. Again, playing in with that sort of idea, that is potentially the area we're looking at for it to kind of blow out a bit, but it can continue. This is looking, at least for 2016, a very strong uptrend. So if we start taking some of these swing highs out, this could actually get pretty aggressive. Beginning of the year, a lot of people were saying, including people like Gartman, were saying we're not going to see oil above $44 in my lifetime. We're now trading at 47. If everyone's gotten short at the bottom of the trend, just be wary of that, guys. And if we put this up on a monthly, it's just kind of what we were talking about. Those were kind of cyclical lows that we were testing at the beginning of the year. You could see these were the lows in 2008, 2009. We only really managed to get below it by a little bit. We came right back inside. Technically we're kind of getting back inside this range, so there is scope, I think, potentially for a move back up, potentially to test that high at $62. There is a scope there, not necessarily saying it's going to happen, but the way this is kind of reacted now, we could start seeing some more aggressive moves to the upside if we take out that swing high. If we can't, we might just fall back, find a bit of stability, range, find some value, and then we'll kind of ascertain which way this market would like to go. If it wants to continue its trend to the downside in the longer term, or continue its short to medium term trend to the upside, back into that range that we've seen for many years. Right. Thank you guys very much for listening. That's pretty much what I wanted to go through for this week. Good luck trading for the rest of the week, and we'll speak very soon. Bye-bye for now.